Hi all, it's me again. This time I want to talk to you a little bit about inventory. I've got several more videos I'm hopefully going to produce tomorrow, but tonight I just wanted to get inventory covered because that's one of the three questions you've got to deal with pretty quickly. We have different ways of talking about inventory, but let's keep it as simple as we can. Inventory is the stuff that the supplies that we sell that are left over at the end of a month. Some we still have, some, we've of course sold. The stuff we have, what we're talking about with inventory in accounting and finance is how do we value what we have? In other words, how do we put an amount of what it's worth on the books? Well, now if you paid attention to the depreciation discussion that we had last week, then you know that we are not always worried about the economic reality. And this is another case where we're not. What we're worried about is matching the right expense to the revenue. And there are two schools of thought mainly. One school is that we want the most current costs, which are usually higher, to match to the current revenue. So we would want the costs toward the end of the year to be matched up against the revenues that we had during the year. And so that would be the LIFO method. What that means is that we keep in inventory the oldest costs. So from invoices at the beginning of the year or even prior years. The other school of thought is that we want to match revenues with the expenses in a way that kind of keeps track of things as they happen. This would be the FIFO method. So in this case, what would be left in inventory were the costs at the end of the year that we spent, not from the beginning of the year. The book talks about LIFO and FIFO, both books do, as if it matters how the goods flow through the business. So that would make you think that milk, for example, would always be recorded on a FIFO basis because clearly we don't keep the milk from the beginning of the year in the refrigerator at the end of the year. The reality is, though, that in accounting, it doesn't matter what milk is actually moving through the business. It's the invoices for the milk that we care about. In other words, it's how we put a dollar amount on what's in inventory and what was expense. So with LIFO, even if we're looking at milk, what we count as the value of what's still in inventory is the oldest costs we spent, which may be much lower than the costs we're currently spending. That means that we're matching up higher costs to current revenues, which means we have less net income and also pay less taxes. With FIFO, on the other hand, we're taking the newer invoices, the ones at December 31st or toward the end of the year, and we're counting those as being in inventory. And so the older costs, which are lower, are what we match up to the revenues. The reality is, does it matter? Generally, not much. The difference between the two in many cases isn't that material at first. Over 20 or 30 years, though, we could have something in inventory at $2 that we now have to pay $25 to buy. So inventory on LIFO is more conservative. We've expensed more, we've reported less net income, and we have a lower balance sheet. So it's more conservative number. Whereas inventory at FIFO is less conservative. Depending on your perspective, you may choose one or the other. The reality is a lot of businesses choose LIFO because it results in lower taxes. Now, if we look at the consistency principle, one other thing comes into play, and that is I can't just switch. So once I pick a method, LIFO or FIFO, I need to stick with it. Teresa has an example under DQ3 of how to do a calculation on weighted average. Weighted average, by definition, pretty well comes out between LIFO and FIFO. Since it's not that material of a difference, we can use it. It's really not a gap method. The two gap methods that we use are LIFO and FIFO. I hope this has helped you a little bit. Remember, it doesn't matter how the goods flow through the business. We don't care if they expire or not. Those are all business decisions. That's how they go. We look at the accounting records to determine the value of inventory, and that's based on invoices that we pick. And we decide the invoices based on LIFO, which means we pick the oldest invoices, or FIFO, which means we pick the newest invoices. See you in class. Thanks.